studying your last two. I swim med when turned in. The styren down to mute. And can learn the pole that sunk he died.
Many business owners believe that a dividend is complete once the money has been transferred from the corporation to the shareholder. However, from a corporate law and administrative perspective, that is only part of the process. A dividend is not just a payment. It is also a corporate action that should be properly authorized and documented. This is why the question in the center of the slide is so important. Was the dividend properly documented? On the left side, we see a common situation. A corporation pays a dividend to a shareholder through a check or bank transfer. The money has moved, and the shareholder has received the funds. From a cash flow perspective, the transaction appears complete. However, proper corporate records are still required. On the right side, we see the documentation process. A lawyer reviews the details of the dividend and prepares the necessary corporate resolutions. These resolutions formally record the corporation's decision to declare the dividend and identify important details such as the amount, the shareholders receiving the dividend, the applicable share classes, and any other relevant information. Those documents are then added to the corporation's minute book. The minute book serves as the official legal record of important corporate actions and decisions. When the dividend declaration is properly recorded, the corporation's records become complete and consistent with what actually occurred. This documentation may seem administrative, but it can become very important during a CRA review, a corporate reorganization, a shareholder dispute, a business sale, or any situation where the corporation's records need to support past transactions. That is why the process shown at the bottom of the slide is so important. The dividend payment is followed by a board resolution. The minute book is updated, and the corporate records are completed. Each step helps create a clear audit trail that demonstrates the dividend was properly authorized and documented. The key takeaway from this slide is that paying a dividend and documenting a dividend are two separate steps. A properly declared dividend should always be supported by appropriate corporate resolutions and accurate minute book records. Good tax planning is strongest when it is supported by good corporate documentation. Once the decision has been made to pay a dividend, the next step is ensuring that the lawyer receives all of the information necessary to properly document that dividend in the corporation's records. A lawyer can only prepare accurate corporate resolutions if the information provided is complete and correct. This is why accountants and advisors often prepare a detailed instruction package before the minute book update process begins. At the center of the slide is the dividend instruction letter. Think of this as the communication bridge between the accountant and the lawyer. It contains the key details that will be used to prepare the required corporate documentation. One of the first pieces of information is the dividend date. The lawyer needs to know exactly when the dividend was declared or paid so that the corporate records accurately reflect the timing of the transaction. The total dividend amount is also critical. The corporate resolutions must clearly state the amount being declared and paid to shareholders. Next, the lawyer needs to know which shareholders are receiving the dividend. This becomes especially important when there are multiple shareholders or different ownership interests within the corporation. The share classes involved must also be identified. Many private corporations have more than one class of shares, and dividends may sometimes be paid only on specific classes. Proper documentation requires knowing exactly which shares are affected. Per share calculations are another important component. These calculations help demonstrate how the dividend amount was allocated among shareholders and ensure consistency with the corporation's share structure. Finally, the lawyer should know whether the dividend is intended to be treated as an eligible dividend or an ineligible dividend. This information may affect the wording of the corporate resolutions and the related tax reporting. Once the lawyer receives this information, they can prepare the necessary board resolutions, record the dividend declaration, update the minute book, and ensure the corporation's records remain complete and accurate. The key takeaway from this slide is that accurate corporate documentation begins with accurate information. The more complete and organized the instruction package, the easier it is for the lawyer to prepare proper resolutions and maintain reliable corporate records. This slide brings together the entire administrative process that takes place after a dividend decision has been made. It shows how a simple tax planning decision moves through a series of important steps before becoming part of the corporation's official legal records. The process begins with the business owner or owner-manager deciding that a dividend should be paid. This decision is often based on factors such as corporate profits, available cash flow, personal tax planning objectives, or shareholder compensation strategies. Once the decision has been made, the accountant becomes involved. The accountant reviews the corporation's share structure, determines who is entitled to receive the dividend, calculates the appropriate dividend amounts, and prepares the supporting calculations. This step is important because accurate calculations form the foundation for everything that follows. After the calculations are completed, the accountant prepares an instruction package for the lawyer. This package typically contains the dividend details, shareholder information, share classes involved, dividend amounts, and any other information needed to properly document the transaction. The lawyer then uses this information to prepare the necessary corporate resolutions. These resolutions formally record the corporation's decision to declare the dividend and create the legal documentation that supports the transaction. Once the resolutions are prepared, the minute book is updated. The dividend declaration, supporting resolutions, and related documents are inserted into the corporation's permanent records. This ensures that the corporation's legal documentation accurately reflects what occurred. The final step is a complete and organized corporate record system. At this stage, the dividend has not only been paid, but has also been properly documented and recorded. Notice the professional tip shown on the slide. The strongest results occur when the accountant, lawyer, and business owner work together. Each professional plays a different role in the process, and effective communication helps ensure that the dividend is both tax efficient and properly documented. Good documentation provides several important benefits. It supports the corporation's tax position, strengthens the quality of the corporate records, and makes future transactions such as audits, reorganizations, financing arrangements, or business sales much easier to manage. The key takeaway from this slide is that a dividend should move through a structured process, from the initial decision, to the calculations, to the legal documentation, and finally to the updated minute book. Every step contributes to creating accurate and defensible corporate records. If a dividend is not properly documented, supporting and defending that dividend later can become much more difficult.